Every day, billions of dollars move invisibly through the global banking system. Payments are made, loans are issued, and fortunes rise and fall. But beneath the surface lies something even more powerful: trust. This is how the modern banking system really works. When most people think of money, they imagine bills, coins, or maybe the balance in their bank app. But money is more than just paper or pixels. It's a shared belief, a system of trust that allows us to exchange value without bartering. Over time, societies moved from trading goods to using symbolic tokens, things that represented value rather than being valuable themselves. And that's where fiat currency comes in. Fiat means let it be done. Fiat money has value not because it's backed by gold or silver, but because governments declare it has value and people believe it. Every dollar, euro, or yen in your wallet is simply a promise that others will accept it tomorrow, just as you do today. That belief is the foundation of the entire financial system. Banks are the beating heart of the modern economy. They hold our savings, deposits, and use those funds to make loans to others. Those loans fuel businesses, create jobs, and stimulate growth. It's a continuous cycle. Deposits enable lending, lending creates opportunity, and opportunity brings more deposits. But it's also built on something less obvious: debt. When a bank gives out a loan, it doesn't hand over money that was sitting in a vault. Instead, it creates new money by crediting the borrower's account. This is the fractional reserve system. Banks are required to keep only a small fraction of deposits on hand. The rest is lent out. Each new loan becomes a new deposit somewhere else, and the cycle continues. In this way, most of the money in the economy isn't printed by governments. It's created by banks every time they issue a loan. At the top of the system sits the central bank, the ultimate authority overseeing the flow of money. Central banks don't interact directly with the public, but they shape the entire economy by setting interest rates, controlling the money supply, and ensuring financial stability. When times are good, they tighten policy to prevent overheating. When times are hard, they lower rates, inject liquidity, and try to keep credit flowing. Their goal: balance, growth without chaos. The entire banking system runs on trust. Trust that deposits are safe. Trust that loans will be repaid. Trust that governments and central banks will keep their word. When that trust falters, as history has shown, panic can spread faster than any virus. That's why oversight, transparency, and confidence are so vital. Without them, the system collapses. Modern banking is one of humanity's greatest achievements. A system that turns savings into progress and ideas into reality. But it's also fragile, built on layers of promises and expectations. Every transaction, every deposit, every loan is part of a delicate balance between risk and reward, trust and regulation, belief and reality. As long as we continue to believe in the value of money, the system endures. Because in the end, the real currency isn't cash, it's confidence. This is the modern banking system, powerful, complex, and alive, built on the invisible foundation of trust.